In 2026, the rules you were taught no longer apply. Work harder, chase promotions, increase your skills. Effort still matters, but not in the way you think, because money is no longer simply earned, it is positioned. Before a human reviews your loan, before a manager sees your resume, before your business gets funding, systems have already made a decision. Invisible systems. For decades, we believed in a simple formula: effort equals reward. Study hard, work overtime, stay disciplined, climb the ladder. That model built the 20th century. But in 2026, your salary is not determined only by hours worked. It is influenced by positioning inside digital, financial, and political systems operating far beyond individual effort. Every action you take feeds data. Every transaction. Every online search, every subscription, every payment. Those signals don't just describe you, they classify you. Some people still believe hustle alone guarantees success, but hustle without positioning becomes invisible. Every modern economy now runs on two layers. The visible layer is what everyone sees: jobs, inflation, stock markets, headlines, elections, market crashes. This is where public attention lives. But beneath it exists another layer: mathematical, automated, policy-driven, data-powered. This invisible layer determines where capital flows, which industries expand, who gets liquidity, and who gets ignored. Global growth is slowing, resources are limited, capital is selective, money doesn't move randomly anymore. It moves towards stability, predictability, and power. We think money is power, but in 2026, trust is power. When uncertainty rises, money doesn't disappear. It migrates. It flows toward strong institutions, toward dominant currencies, toward nations perceived as safe. Some countries generate billions, not by producing more, but by being destinations for global capital. Currency dominance is a form of silent leverage. When global trade settles in your currency, you influence liquidity worldwide. Sanctions don't explode economies. They freeze access. And freezing money mid-transaction can destabilize entire systems overnight. This is not conspiracy. It is structural design. When a central bank adjusts interest rates by just 0.25%, trillions of dollars in bonds, equities, and global markets reposition instantly, long before headlines reach the public. Liquidity is directional. When rates fall, risk expands. When rates rise, leverage collapses. Entire sectors grow or shrink based on policy decisions drafted years in advance. The public reacts to news. Institutions react to flow. The most powerful corporations don't compete with nations. They align with them. Tech giants, energy firms, financial institutions, they monitor regulatory drafts. They anticipate policy shifts. They move capital before trends become visible. They don't chase opportunity. They position for it. Positioning is power. Timing is power. Structure is power. Data has become the new infrastructure of the global economy. Control the data pipelines, and you influence transactions, communication, and capital itself. AI no longer just automates tasks. It optimizes allocation, credit approvals, loan limits, job visibility, risk scoring, content distribution. Algorithms assign probability, and probability determines access. Bias doesn't disappear. It hides behind the word optimization. Those already positioned inside strong systems benefit. Those outside struggle to break in. AI does not eliminate all jobs, it removes leverage. Negotiation power declines. Efficiency becomes justification. Human cost becomes secondary to system performance. Debt, once considered dangerous, has become structured inventory. Countries issue bonds, banks purchase them. Funds trade them. Interest becomes predictable revenue. The global debt market moves in the tens of trillions, and every rate adjustment redistributes wealth silently. The system doesn't collapse under debt. It profits from it. Energy grids, logistics corridors, semiconductor supply chains, cloud platforms, these are not just industries. They are control points. Whoever anchors themselves near these flows becomes protected during volatility. Small players compete on products. Powerful institutions compete on infrastructure. Most individuals are told to work harder, stay motivated, stay consistent. But nations, corporations, and institutions operate under different rulebooks. They design standards. They influence compliance. They shape regulation. Every new rule creates dependency. Dependency generates revenue. Revenue generates influence. Influence sustains control. Awareness of this structure does not guarantee wealth, but it changes how you see the world. Instead of asking, "Why am I failing?" you begin asking, "Which system am I positioned inside?" That question separates spectators from observers. If you look at a global capital flow map, you won't see chaos. You'll see corridors, trade routes, investment pipelines, currency channels, energy networks. Every line represents structured movement. Companies ride these flows, nations design them. Together, they generate trillions quietly. The world appears unstable on the surface. Markets swing, headlines panic, narratives change. But beneath the surface, movement is calculated. In 2026, effort still matters. But effort without awareness is fragile. The invisible system does not eliminate opportunity. It redistributes it. Understanding how money flows, how policy shapes capital, how data assigns access, this is no longer optional knowledge. It is survival-level awareness. This is not about motivation. It is about decoding power before it moves. Because once you understand the system, you stop reacting emotionally to headlines. You begin observing structure. And once you see the system, you can never unsee it.